Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is July 25th. We are again running out of days in August, so if you haven't taken the time to invest this month, go ahead and do that, or this week. We still have a few more days, but again, headed into August very quickly. The year has really flown by. We are going to take a look at U.S. Bank. This is out of the financial sector. Let's jump right in. If you want to know more about them, check them out, www.usbank.com. That's www.usbank.com. That is their homepage where I pulled this information from. Since the Lincoln administration signed our national bank charter November 24th, or number 24 in 1860, that's either November or number, so I'm just going to go with number 24 in 1863. We've drawn on our financial strength to serve customers. This has been especially evident in times of need, such as during the COVID-19 pandemic. Our response by the end of 2020 included a $20 million premium pay program for employees, relief assistance, and 108,000 Small Business Administration Paycheck Protection Program PPP loans for our customers, and $30 million in expedited charitable contributions for our communities. As a result, we're proud to have been named the most essential bank amid the pandemic in a ranking of the Harris Poll. We also recognize that this past year has fundamentally changed banking. By accelerating the shift to digital products and services, we're positioned well for the future, having launched new tools like the U.S. Bank Smart Assistant to complement our 26-state branch footprint. Typical bank here, been around a long time, right, since 1863, so well over 100 years. Credit cards, checking, savings, CDs, mortgage, investing, and that's for businesses and private consumers as well. Again, www.usbank.com. That is their homepage if you want to know more about them. You could get in here and check out their company history. Click this tab here, Future Vision. Each one of these tabs would be something you could click on and take a look at. Let's keep on going. And the reason we are taking a look at them, down 3.5% on the day, close the day out at $37.86. We are talking about U.S. Bancorp, ticker USB, out of the financial sector. 52-week range as low as $27.27, as high as $49.95. So they are floating in between their low and high here for the last 52 weeks. Average volume 16.4 million. Today's was 14.3. Sell off pretty much from start to finish here, all day. Just a steady decline throughout the day. Market cap of 58.036 billion. Beta not available. Not real good to see, so they're either very volatile or not volatile at all. I would look up another source. This is why I always recommend more than one source, and you'll actually see her in a little bit. There's even some other information that wasn't available for this that I had to pull from stockanalysis.com. Their free cash flow, you will notice, is missing. It would not come up either, though I was able to find it over stockanalysis.com, and that is why I always recommend more than one source to get your information. So when it's not available in one, you can check it in another. But anyway, PE ratio, price to earnings is $10.55. Not a good metric for banks here. Really, when I look at banks, I look at price to book. You want something close to 1. 1 is really fair value. Anything under 1 is undervalued, and anything above 1 is overvalued, at least for banks, according to price to book. EPS, earnings per share, is $3.59 per share. That's pretty nice. Earnings date, October 18th. Will be the next one. Forward dividend, $1.92 paid out in the year. They are a quarterly payer. We'll see that here in a little bit. Very nice yield for a bank here. 4.89%, nearly 5% yield on this one. This is a very, very nice yield. Ex-dividend date was June 29th. We've just passed that. They will pay out, or they just paid out, July 17th. So if you bought them now, you would be in line for the next dividend payout. And their one-year target estimate, at least according to Yahoo Finance, $43.46, which does speak to some upside appreciation in the stock price, where it sits at $37.86. So a little bit anyway. Now I'd like to get into statistics, look at dividend yield theory. We look at the 5-year average dividend yield, 3.51. We compare it to its current, 4.89, or over here where it says forward annual dividend yield, that's the same, right? Same number, forward annual and current, they're both the same. And if it was higher, which it is, and it's substantially higher, 4.89% compared to the 3.51. So this speaks to some undervaluation in this particular company right now. If this number was lower than their 5-year average, it would speak to some overvaluation. So at least according to dividend yield theory, they are undervalued. Payout ratio is low, 53.48%. We'll see if they're growing here in a little bit. But paired with a high dividend yield at 4.89%, plus only a 53.48% payout. This company is poised to be able to continue to grow this high dividend yield on into the future, which is very nice to see. I'm not going to look at free cash flow here, but if you were to go under financials, you'd find free cash flow. Typically, you'd find their income statement, their balance sheet, growing revenue. You want to make sure it's growing. You'd look at their debt, make sure they don't have a huge debt load, some other information in there, buying back shares, all sorts of information in there. You want to get in and look at the financials, but let's keep on going. Take a look at this one. And this is stockanalysis.com over here. Like I said, I always recommend more than one source, and that is so that you can make sure the information that you get is accurate. I like Yahoo Finance and Stock Analysis for different reasons. They present the same information. Financials has a lot of the same information. Statistics, forecast is what we're looking at here. Dividends is what we'll look on the next page. So let's look at the forecast real quick. They have 18 stock analysts that have taken a look at this. They call it a consensus buy. I would tend to agree, though I would like them to pull back a little bit closer to their 52-week low. But overall, it looks like they're significantly undervalued, at least according to dividend yield theory. Very nice dividend yield. We'll see if they have free cash flow growth. But their low estimate is $39, so it currently sits under their lowest estimate. And if it came back up, that would be a 3.01% increase in the stock price. Their average estimate is $50.89. So they have a much higher estimate than what we saw with Yahoo Finance. That would be a 34.42% increase. And that is more in line with what you see when you look at them according to dividend yield theory. And their high estimate of $68, that would be a 79.61% increase in the stock price. All the while, you could collect that nearly 5% dividend yield. Now, another one I like to look at under statistics is return on equity, ROE, and return on invested capital, ROIC. I like 10% or better, though this one you'd want to compare to their industry average because typically banks are not real high. This one is lower than I'd like to see, 2.57% for return on equity. Return on invested capital, 2.91. A little bit on the low side for me on this one, but not necessarily a deal breaker. Free cash flow. So again, same information you can find from Yahoo Finance, you can find from stockanalysis.com. They just show it in a little bit way. Finances in millions. So we're going to see their free cash flow here, which we typically look at on the previous page, but that's all right. 2019 was 4.8 million. So right, just like in Yahoo Finance, it is in the millions. Financials in millions, right there, it's written out. So 4.89 million free cash flow there. 2020 was down 3.7 million. 2021 up significantly, 9.8, and 2022 huge jump up, 21 million. And I do like how they show the percentage of increase from the previous year. Free cash flow growth, right? Negative in 2019, negative in 2020. That was probably the COVID impact right there. But big jump up, 165.61% in 2021, and 2022, 113.97%. So you may like the way that this presents the information better. That's another reason why I like more than one source. You can kind of look at how they present it and see what you're able to comprehend and read and understand the most clearly and use that one. So let's keep on going here. Take a look at the dividend. We want growing free cash flow. So we were seeing the last couple of years, they did have growing free cash flow, significantly growing actually last year in 2022 from 2021. Low payout ratio, 53.19%. As you can see back here in 2020, they were paying out 42 cents. So June 29th, 42 cents. Looks like they raised it up September 29th, 2021 up to 46 cents, rode 46 cents all the way up to September 22 to 48 cents. And I would be willing to bet if they're going to continue raising it, it will be on that September timeframe. That looks like when they raised their dividend. Decent dividend growth. Banks usually aren't fast growers. This one has 4.35% growth, which does beat typical inflation. And I think right now inflation is back down in the 3% range. So it would beat current inflation as well, which is what you want to see. So dividend growth is good. Payout ratio is low. Dividend yield theory says it is below value. You want to take a look at price to book on this one to see where it sits. But overall, this is one to definitely add to the watch list. If not, you're looking for something in the financial sector, might be one worth adding to the portfolio. You let me know what you think down in the comment section below. This is the vested interest stock screener. Again, see how I've got for financial companies. Price to book. So we add this one in for financial companies. The rest of them go for any company there. Must meet 4 of 7 to be investable. Must meet 5 of 8 if it is a financial company. So this is why we lay out the videos the way we do. This is how I look at a company to see if I want to invest in it or if it's already in my portfolio to see if I want to continue to add to it. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks we're investing in, stocks we're watching, stocks we're avoiding, tips and tricks we've learned along the way. Maybe you're in options. You do options. You could share some of that with the subscribers here. Anything you have to share, comments. If you have something for a future stock pick of the day video, a company you want me to cover, go ahead and drop that down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I want to share my opinion and investing in for educational and entertainment purposes. Investing involves risk and communities. One should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.